Good afternoon and welcome to this weekly market update from AGM Markets. Today is the 19th of September 2013. What we'll do today is go through some technical analysis on Euro dollar, cable, dollar Swiss, dollar yen, dollar CAD and gold. Just going to review what's sort of gone on this week since we did last week's video. And yeah, just go through the setups that are in play. Sort of update the setups that we spoke about in last week's video, and yeah, just go through technical analysis basically. For anyone who follows, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple one is a 100 simple moving average, and the gold is a 200 simple moving average. We're not making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website, which is www.agmmarkets.com. Okay then, this is the Euro dollar chart. What has been going on this week? We've just been in grind higher mode really. First of all, let's just quickly have a look at last week's weekly candle. Last week's weekly candle was very bullish, as you can see there, and you can see it gapped up as well, and surprisingly it hasn't quite filled its gap. If we flip it to the let's look to the 1 hour chart, you can see this gap here. It didn't quite fill it, it only filled about around half of it, which is quite surprising because especially on Euro dollar, they do tend to fill these gaps most of the time. So yeah, that'll be an interesting one to see. Of course it can still fill it, but normally it does it straight away really. I mean, and current, yeah, sorry, I was going to talk about something else, but yeah, let's focus on this weekly chart. So last week's weekly candle was bullish. We had a gap up, and we are now above this 200-week moving average and flying high because of yesterday's FOMC meeting. Everyone was expecting comments about tapering that will happen very soon. And it looks like it's been held off, so the dollar has been weakening extremely, and that's very evident in this chart. You can see it's absolutely ripping higher. Last week in last week's video we spoke about this fib setup here on the daily, from the lows of June to the highs of August there. So that's the high there. I'm just going to widen it for you. And bam, you can see right off this 50% Fibonacci retracement level, pretty much to the pip, at the 130.98, so let's just call it the 131 handle, and that rotated higher, and that move is now complete in my opinion. So yeah, in terms of Euro dollar now, the next fib move I'd be looking at would be from these lows here, from where we bounced off that 50%. So this is the next dip. Let's say it does top out here, which in all fairness it could do. Bear in mind it's at the end of the week, and you can already see it's forming a bit of upper wick here. If you look on the 4 hour as well, you can see it's getting a bit wicky at the top there. So let's say it does top out here. Of course it doesn't have to, you can keep on grinding higher, but the principle is here is that this would be the new fib from the low to the high, and I think it's just very bullish. I mean, I wouldn't really want to be, well, I mean, in terms of selling the pair, yes, if it does form a nice reversal candle here, then I think it will come back down to around these levels, or maybe even off of this high here. This is the sort of next sort of support and resistance, really. The 134 there. We haven't had a daily candle close above that level for a while. Of course, it could be the spike here, which is 134.50. That would definitely be a level to keep an eye out from that one. So that's 134.50. Yeah, and that's the Euro dollar focus really. Just sticking to the daily charts, been playing out very, very nicely. Of course, we have that gap to fill as well, so don't forget about that. If it does start to come back down, then maybe the 61.8 could be a better level to play off, and it's actually previous support as well, and the 50-day moving average is near there as well, so keep an eye on that. But in terms of buying, I wouldn't really want to be buying these highs, to be honest with you. I think it's done a nice big move now, and I reckon it wouldn't be surprised to see it retrace. But let's say it does keep on popping higher, then the high is over here on the left, at around the 136s level, the 136.50s, I'd say. Yeah, 136.50 is pretty much the daily candle close there. So that's a key level to look out for if we do keep them popping higher. In terms of the pound dollar, we spoke about last video, it's also been playing the fib dips very nicely. This was one here, the first one there, from those lows to the highs there. Bam, off the 50%, rotated higher. And then the next one up here, so if you extend it to that high and then bring your low to where we bounced off the 50%, that came just shy of the 50% level there, and rotated higher. So the next dip, I'd use the low from where we bounced off of here, and then extend it to the high. Let's say it does top out here. Of course it doesn't have to, it can keep on grinding higher. Wouldn't be surprised to see it top out here, especially at 9:30 this morning. We had some weaker, I think it was UK, the retail sales figures, and they're weaker, so that could be a decent catalyst for a retracement. Also, you notice this 50%, well, the 50% and 61.8% levels here, they coincide with this big high around here at around the 157.30s. 157.30s, 40s, really that high there. So that could be an interesting range in between the 50% and 61.8% retracement. Also at 61.8 coincides with that spike high there as well, which I'm hovering my cursor over. So yeah, if it does retrace, then that'll be a nice, interesting range for some sort of retracement down and bounce up, I would have thought. Yeah, that's pretty much the focus on cable. So similar with euro dollar. Looking at two potential fib moves there if we do start to retrace, and a couple of interesting levels there as well. But I think the healthier retracement, the first one will be the 50%. I think also its previous support as well. You can see that clearer if you zoom in on you can see you had two candles here, pierce below, closed above, so previous support there at that one spot 57.96, which of course is just below the 158 handle. So that should be very interesting there if we do come back down, which I think it will do. The dollar Swiss chart. The dollar, of course, has been got really sold off last night because of the FOMC, and it looks like it's sorry, of course. In last week's video, we spoke about this fib here. From the highs to the lows, a 50% retracement, that's sold off, so that move is also complete. Similar to euro, we've been saying for a while that euro dollar and the dollar Swiss have been a very mirror image chart. So in euro dollar, we have the bullish up move, which bounced off the 50% retracement and ripped up higher. Complete opposite move here, down move, came back up 50% and sold off. So pretty much pure mirror image chart there. But on dollar Swiss, for me, the only thing I'm really interested in is this support level here, which is at the 90.67. So I suppose you can call it 90.70. That's where we, if you look to the left of that chart, you can see just around here to the left, lots of spikes low and daily candle closes above. Also, if you can see this where my cursor's hovered over here, it pretty much spiked it to the pips. That's a massive level there. And the price action will be very interesting there, hopefully. If it comes down, which it looks like it will come back down and test it. So keep an eye on that. Look at the candles, maybe the 4 hour, well, of course, and this is the daily chart, so look at the daily. But the shorter term time frames, you may get a nice reversal candle and a decent buying opportunity. That's what I'll definitely be looking out for. Yeah, that's the focus for dollar Swiss. The dollar yen chart, not as interesting as the other pairs. We spoke about in last week's video, not massively interesting, although what I do think is interesting is on the 4 hour chart. This is the time frame that I've been looking at for this week. We had a fib move here from the lows to the highs, which came off in between this 61.8% retracement and 78.6% retracement. So bear in mind that as a range, because then if you extend your fib to the high, then you extend your low to the low where we bounced off of there on that setup, you can see here, surprise surprise, we're also have bounced up from this range as well, which is in between the 61% and the 78.6. So if you're playing fibs on the dollar yen, it's all about well, a lot of people, I'll assume, will be buying off the 61.8% retracement with stops below the 78.6, or looking at a reversal, waiting for a reversal candle to form in between that range, and that would have been a perfect one there. Nice hammer, which formed in between the 61.8% retracement and 78.6, like it did in the last fib, and it's rotated higher. So that's the fib I keep an eye out, and it looks like it's going to keep on rotating higher and perhaps take out these highs and go back up to the key 100 level. But in order to do that, it needs to get above the 99 handle first, which so far it hasn't. You can see today we've already had, I'll just zoom in a bit so you can see a bit clearer, it's already come up, tested that pretty much to the pip, and the sellers have come in. So keep an eye on this 4-hour close. Be very interested to see if we close above them, then I think it will rotate high and get towards those towards the 100 handle, or at least the 99.50s. But yeah, so the 4-hour close will be very key there, and of course the daily close as well. I think it will need a daily close above that to rotate high. But yeah, that's the focus on the dollar yen. Dollar CAD has been a very interesting chart off recent. We spoke about this in the last quite a few videos really. Let's keep it in terms of today's this year's focus. So this trendline support we spoke about in the last week's video was holding, and of course it's been playing the fibs very nicely in recent times as well. But you can now see, because of yesterday, the FOMC, with the dollar getting weaker, dollar CAD has tumbled really, and we had a daily candlestick close below this trendline support, and it really is just selling off quite aggressively now. So the next key support, you'd have to say, first of all, is this one here, which is that was a 61.8% fib bounce, I think. So that's the first level I keep an eye on, which is the 1.0150s, and then if we get below that, then you've got this key bounce here, this key support here, which is at the 1.0120s really, 1.0110s to 1.0120. So two key support levels there I keep an eye out for. And of course, if you draw a fib from the yearly low to the yearly high, I'm going to say my computer's been a bit slow today. Yeah, so from the yearly low to the yearly high, we have yesterday the daily candle closed just above that 50% retracement, and today's candle is below it. So the daily candlestick close is very key. So if we close above, then it could continue this uptrend, or it could go back up and perhaps test this trend line support, and then that trend line support could then turn into resistance and bring it back down to these next two key supports. And of course with the 61.8% retracement there as well. So very interesting chart. That's how I'd keep it set up on my chart, keeping the focus on this daily. So you've got the trend line support there, these key fibs, and some interesting support levels to keep an eye out there. That's the Forex done. Let's have a look at gold. Gold, we spoke about last week, was in an uptrend, very similar to dollar CAD here actually. As you can see, dollar CAD was in an uptrend. It closed below, sold off. But as we've just been looking at on dollar CAD, it's interesting to draw a fib here from the lows of the chart to the highs, and bam, surprise surprise, 50% retracement we are getting bought up from. Of course it got helped with the FOMC yesterday, weakening the US dollar, and of course people getting rid of their dollars and putting them into gold as a safe haven. But as also we spoke about dollar CAD, with this trendline support, if it does come back, if we get a bounce here off this 50% level, it pops back up to trendline support, which could act as resistance. Similar thing is already happening here on gold. So you can see we've come back up here. It's tested this trendline support, which is now acting as resistance, and we're getting sellers coming in already. So the daily candle close will be very interesting here. yeah, if it closes below, then I wouldn't be surprised to see it come back down to this key level. But I personally think it will keep on grinding higher, because this yesterday's daily candle is extremely bullish here, a massive bullish engulfing candle with not much upper wick here whatsoever. So I mean, today's candle's doing what it already sort of should do, really. People are banking profits already, so have an initial bit of selling coming on, but I wouldn't be surprised to see it rotate higher and perhaps even take out these highs at the 1432. But in order to do that, it's got to close above this trend line, in my opinion. Okay, then that's all for today. I hope you found this video useful. If there's any other pairs that you want to have a look at next week, then feel free to comment under the YouTube channel or our Twitter feed, which is at AGM Markets. Okay, thanks for watching. Have a great rest of the week trading, and I'll catch you next week.